everyone, and welcome to Excel with Experts, a new series where we get into the nitty gritty aspects of what goes beyond and behind investing. And today, for our first episode, we have a very special guest, the co-founder of Aurum Capital, Mr. Jiten Parmar. And one of the core philosophies or the core competencies of Aurum Capital is value investing, which brings us to today's first main question. Jiten, so what is actually value investing?
Value investing is basically nothing but investing in assets, or rather stocks in this case. Of course, it involves fundamental research. We follow a few lines of value investing. The first thing we look at is, growth at a value. Growth companies which are available at cheaper valuations than what their intrinsic value is. Then we also look at, turnaround bets, mispriced bets. We look at cyclical businesses, basically a stream of value investing, but it is more to do with different business cycles. And we also do special situations. So these are the streams which we focus on during our value investing approach.
So let's say I have a friend who I'm introducing to investing, and the person is really young, person is just starting out to know what investing is. In such terms, what would be the most easiest way or the most on an everyday basis, an analogy that you can provide to say what value investing is?
If a kid is going out to buy candy, so the value of the candy is 10 rupees, but he is buying it on a discount of 50% and buy it for 5 rupees. So that is basically nothing but value investing. Or, for example, let's say we go out to buy winter clothes. Generally, what everybody would do is, they would buy winter clothes at the onset of winter or just before winter. Value investor would, buy them in summer when they are at 50% off.
So that's a great example, because I think it would, be very relatable to Indian parents or Indian families. So talking about value investing, I mean, in today's world, we have a lot of different investment strategies of different varieties. Comparing to all that, in your own terms, how would you, let's say, differentiate value investing from, let's say, growth investing or momentum investing?
In growth investing, growth at a value is also basically value investing. So that is one of the streams we follow. But growth at any price is something which we don't follow. And another one is momentum investing. That is basically nothing but trading. So there, people look at 52-week high or stocks which are in momentum or having huge volumes, and they look at, so again, different streams of investing. People have luck with different streams. We have had luck, or we've had sufficient expertise doing value investing for almost 3 decades. I'm into the market since almost 28 years now. And of course, with value, we look at cyclical investing too. That is something where we have differentiated ourselves.
Got it. That makes a lot of sense. Coming, to talk about yourself, Jiten, you are a person who has years of experience in the investing realm. You even had your own tech startup in the US, and you're trying to change the investment game by making things more easier for customers and for investors. When you're trying to lend a helping hand to anybody who's starting to invest, tell, or what are the certain parameters or certain filters, or maybe a certain checklist that you would go through? How do you select that first cream stocks, at least in terms of value investing?
I'm sure they would be having some core competence area. They could be from, let's say, IT or something. So what they should try to pick up is stocks which have good value from their core competence area. Just giving an example of IT, for example. Mm-hmm. So they can study. They would be able to understand the sector much more, because value investing does involve understanding the sector. Of course, I am from IT background, but then over the years I have learned to analyze the cement sector, for example, the steel, the metal sector, the real estate sector, understand different sectors. But somebody starting out new can start with their core competence area.
So something that I caught up on the earlier question was that about cyclical investing. So I was just interested in what cyclical investing, because even one of Aurum Capital's prominent small case is cyclical investing. So what actually is cyclical investing, and how is it actually connected to value investing?
Fail to understand that there is a lot more cyclicality in the markets than what they would think. There are 3 types of cycles. One is business cycle, one is market cycle, and one is economic cycle. All stocks are affected by either of these. Understanding of that would help a lot. Some are more cyclical, some are less cyclical. So understanding of that would help. Now, what we try to do in cyclical investing is, there are two ways to invest in cyclicals. At least that's what we follow. One is contra-cyclical, where you would buy it when it's in complete down cycle, but you have a confidence from past cycles and past history of the company that this will survive, and at this point it is in absolute down cycle, you get it at very good valuations, which when the cycle turns, that will make a lot of money for you. So that is contra-cyclical. And another is basically cyclical turnaround. So when a cycle has turned, and from bad cycle to a good cycle, so that is when you invest, when just it's on the cusp of a turnaround. If we talk about the cyclical bets portfolio on small case, we follow the cyclical turnaround strategy in that.
Coming again to cyclical investing, when you listen to the term, or when you hear the term cyclicals, it has a lot to do with cycles. And when again you try to connect it, investing with cycles, it has a lot to do with time. So am I right when I put it as in time is probably the most crucial aspect in value investing? And how is it different with value investing and cyclical investing?
Timing is an important element. You don't have to be exactly right, but you have to be closely right. Especially if you do contra-cyclical investing, it does require a bit of patience, because you are buying in bad cycle and you are waiting for the good cycle. Sometimes it might happen in 6 months, sometimes it takes 2 years. So that is contra-cyclical. But in cyclical turnaround, since we have worked on cyclicals for a long time and we understand many sectors, cyclical turnaround strategy is something where you don't have to wait that much, and basically the results start flowing in sooner. But of course they will not be the same as a contra-cyclical, because at contra-cyclical you are buying at almost absolutely the lowest point.
So coming to the next question, this is probably one of the most intriguing questions. What was that one mistake that perhaps you must have made during your years of experience, or one that you can easily recall where things did not go as planned?
Yeah, so I will not be able to talk about any stock, but then I can talk about some sectors. For example, textile, it was in downturn for quite a while. I did bet in my personal portfolio on textiles few years back, and it didn't turn around, and I had to wait a long time, much more than what I would have anticipated. Of course, I would say start of this year there has been a turnaround in textiles, so it has paid out, but it has taken much longer than what I would have thought while investing in it. Again, since if you have a process where you are investing in companies which will be able to write down these bad cycles, if you have the patience, then eventually you do make the returns. But again, as I gave you example, textiles is something which took much longer than what I had anticipated. On the other side, last year we invested into real estate, and we expected it to take a while. It started playing out almost in just a few months. So you can't be exactly right, when it will play out, how soon or how later. But more often than not, with our experience, we have seen that out of 8 times out of 10, it does play out as we envisage.
So Jiten, it's very fascinating that you have actually had experience with the two extremes of a single situation. That is like textile industry will boom, but it took a bit of a time more than you had imagined. Or let's say for the real estate, where you thought it might take time, but it boomed almost really fast. That seemed to look like quite polar opposites, but at the same time very similar and connected. What were your learnings from that particular kind of a situation?
So again, and this is not the first time this has happened. I just give you some examples. I can give you some examples where things again move much better than what we had expected. Again, metals we invested last year. It really worked out very well, much sooner than what we had thought, and much larger than what we had thought. So this happens all the time. You can't be very sure of how soon it will play out, or long it will play out for. But you get a sense of the cycles, and that is where basically understanding cycles help. You go into history, see the past cycles, and then you try to make some judgments based on that. And it might not repeat, but it is similar. Each cycle can be different, but then a lot of it rhymes. So again, that does come from experience, but we have seen that happen a lot of times.
But I think a lot of investors today, when they see that they might be facing some losses, or they might see that their stocks or their investments aren't skyrocketing as they had imagined, they lose a lot of patience and they try to cut their losses. So when this comes, what do you have to say to new investors about patience and the importance of patience in investing, and especially in value investing?
Again, so patience is again very individualistic. So I have the patience, and that's why I would invest in a contra-cyclical. We also know that same time all our subscribers or all our clients may not have the same patience. So that is why we have this product which is cyclical bets portfolio, which works on cyclical turnaround. So ideally in that, we invested in cyclicals or in textile when it started turning around. So we didn't have to wait that long. Product we have where we hope that we don't have to wait that long.
So recently, Sensex and Nifty were at all-time highs, and with this, a lot of investors have this same stupid question, but also very infuriating and hard to answer, which is, when is the right time to invest? So what would be that one answer that you could give to give a clear understanding or a clear-cut understanding of the situation?
Yeah, so I get this question almost daily from somebody or the other. I say that I have no idea what I think will happen to the Nifty and the Sensex. Over a long period, we all know that it will go up. That's all I can say. Again, so the thing is, we at Aurum Capital, we actually don't focus on the indices at all. We individually focus on individual stocks and sectors and what are the valuations in the companies which we have in our portfolio or which are under our ideation stage. We are not into the guessing game of what the index levels are, and they can give you some pointers at the most, but eventually it's your portfolio that matters and how much comfort you have with the valuations of your portfolio and individual stocks, that matters. But at the same time, if a lot of people have these behavioral issues, so as to say that what would happen if I invest at this point. This has been there for almost last 1 year for a lot of people. So if people would have just looked at the indices and looked at the sharp bounce, and they would have not invested and they would have stayed out of this market and lost such a great opportunity. So that's why we say don't look at the indices, look at individual stocks and sectors.
So Jiten, one of the other fascinating things behind being a fund manager as yourself is, what is that process like? How does it keep you awake at night when you have to analyze a lot of data, when you have to analyze a lot of cycles to give the best research possible? How much of a hard work is that, if you could actually name it, or what is the process that goes behind it? How hard is that process?
We talked about the themes which we look at, and once you identify the theme, then you get to the stock, and for narrowing down on the stock, we do a lot of work. It's reading a lot of at least 5 annual reports, 3 years con calls, past history of the management, whether they have had any corporate governance issue or not. We have zero tolerance toward corporate governance, but what are their competitive advantages, how they have done in the past cycles, in the good cycles as well as in the bad cycles. So a lot of it goes into identifying the stock, and a lot of there's a checklist we have. For us to be very thorough, it does require a lot of hard work, and obviously that's why there is a place for experts in stock selection.
So wow, Jiten, actually coming from the rigorous process of the checklist that you have to make the right list at the right time, relating with data and research. Let's say if we also wanted to learn value investing, which we're trying to learn right now, what are the few places you would advise for us to go to? Any few books that you would like us to read, or any other places that you could lead us to where we can learn about value investing?
Benjamin Graham is the guru of value investing, Intelligent Investor and Security Analysis. These are the 2 books which I think every value investor should read. There are a lot of resources on the net also. You can use sites like screener.in, which does provide a lot of fundamental data, and try learning through that. So a lot of information is available in that. You also have to develop some of your own strategies, because market is changing, the way things are moving, the longevity of stocks is changing. So you have to adapt that, and of course that all will come with experience.
So this gives us a fair idea of a head start where we have to go to actually learn about value investing. But something on every lazy student's mind or every backbencher's mind, such as myself, it would be, how long would it actually take for a new investor to actually learn about value investing? and to actually start seeing results on an average or approximately?
A lot can be learned in 6 months to 1 year. At least you can get all the fundamentals in place, at least theoretically. So it depends on period also, right? I mean, if it's a bull market, you will see the results. It could not be because of you, it could be because of the market, but then the real test of value investing and patience comes in bear markets.
I think that giving that time frame, Jiten, is like very important for a few of us, because it gives a space or capacity where people or investors can know, okay, maybe they can see results or they can achieve something in a certain time frame and they can work within that time frame. If there is that one takeaway or one advice that you could give to new investors who are coming in to the scene of investing, what would that be?
So again, the one advice I would give any investor is, understand yourself. Not every investor is function in the same way. So you have to understand what is your temperament and understand yourself, whether you are cut out for value investing or you are cut out for growth investing or momentum investing. Every style has a place in the market, and you understand what you are good at and stick to it if it is working for you.
I think that makes me feel really glad that that Aurum Capital is actually on small case platform, because we started the conversation just by not even knowing what value investing is, and to even think of all the hard work and the analysis and the data and to do this research is something that I can't even think of. And it makes it a lot easier that Aurum Capital is there on small case, where all we have to do is to go to your microsite and subscribe. And so audiences, be sure to check out Aurum Capital small cases. The link is given in the description below. And before you go today, do you have any parting words to say?
I would say that investors need to look at the long-term picture and really think a bit long-term, and not look at the indices currently. I think long-term story is very much intact, and the future is bright. And I think there is a lot of money to be made in equity in the future.
So everyone, you heard it here, that the end game for value investing is always the long term, and to keep the long term in focus. Once again, really happy, Jiten, that you're actually took the time to do this. And all audiences, before you go, please make sure to like, share, and subscribe. And we also believe that you can excel with the expert, Mr. Jiten Parmar, in value investing from today's session. And please take the time to check out Aurum Capital small cases. The link is given in the description below, where they offer two major portfolios, one on cyclical investing and special situations. Thank you so much, Jiten, for taking the time. I hope to see you soon.